Hey everyone, welcome back to Corporate Decoder, the place where we try to find hidden riches and maybe some skeletons in the closets of big companies. Today we're diving into Hims & Hers Health Incorporated's latest report, and let me tell you, they have some interesting moves up their sleeve, or should I say on their balance sheet. Before we get started, if you enjoy getting the real story behind these financial filings, make sure you hit that subscribe button and the notification bell. And hey, we have a growing community over on Discord where we break down these reports even further. So join us there using the link in the description below. Alright, let's get straight into what Hims & Hers Health Incorporated is doing. It's November 2025 and the company has decided it's time to show some love to its shareholders. They've just announced a brand new share repurchase program, and this one is a biggie. They are authorizing themselves to buy back up to $250 million of their own class of common stock. Now, what does this mean for you and me, the folks who might be watching their stock? Essentially, when a company buys back its own shares, it reduces the number of shares floating around out there. This can make the remaining shares look more valuable because the company's profits are now spread across fewer shares, potentially boosting earnings per share, which is a metric investors love to watch. It's like dividing a pizza among fewer people. Everyone gets a bigger slice. This new program is set to run until November 2028, which gives them a good window of time to execute these buybacks. And get this, they are not exactly starting from scratch. In just over a month, from the 1st of October to the 7th of November of 2025, they already repurchased a significant chunk of shares, a little over 1.3 million shares, costing them about $55.5 million. They used up every last dollar of their previous $100 million repurchase program that began back in July of 2024. So, it seems like they are quite keen on returning capital to shareholders. They plan to do this repurchasing in various ways, like buying shares on the open market, which is the most common way, or through private deals, or even using something called Rule 10b-5 to 1 plans. These plans are pretty neat because they allow companies to buy back shares even when they might have important, non-public information. As long as the plan is set up in advance. The company also states that this new buyback program can be paused or stopped at any time, which is standard language but means they have flexibility based on the business and market conditions. Essentially, they are saying they will buy back shares when they think it's a good deal for the company and its shareholders. But they aren't obligated to do so if other investment opportunities arise or if the stock price is just too high. Now, let's think about the bigger picture. Hims & Hers Health Incorporated is known for its telehealth services, connecting people with doctors for various health needs, from hair loss to anxiety. Companies in this sector often face a balancing act. They need to invest heavily in technology and marketing to grow their customer base. But they also need to show profitability and efficiency to investors. Their stock is traded on the New York Stock Exchange under the ticker symbol HIMS. When a company announces a large buyback program, it can signal confidence from management in the company's future prospects. They believe their stock is undervalued or that they have excess cash that can be best used to boost shareholder value through buybacks rather than other investments at this specific moment. So, what's the story here? Hims & Hers is proactively managing its capital. They have demonstrably used up their previous buyback authorization, and now they are launching an even larger one. This suggests they see their shares as a good investment compared to other uses of cash. It can also be a strategy to support the stock price. During periods of market volatility, buybacks can provide a floor for the stock price. From a broader perspective, this move aligns with a generally growing trend among tech and health tech companies to return value to shareholders. Especially after periods of rapid growth and investment, it shows a maturation in their financial strategy, shifting from pure growth to a more balanced approach that includes capital return. Now, let's look at the implications. On one hand, a $250 million repurchase program is substantial and could lead to a positive impact on the stock price and earnings. Per S-Hare, it signals that the management team is confident in their business model and future earnings potential. However, it also raises questions about their future growth investments. Are they slowing down their expansion plans to fund these buybacks? Or do they genuinely believe they can grow and return capital? That's the million-dollar question, or in this case, the $25 million question. It's important to remember that buybacks, while often positive, are not a guarantee of stock price appreciation. The overall market conditions, the company's financial performance, and competitive pressures will all play a role. So, while this announcement is definitely a positive signal, it's just one piece of the puzzle. To wrap this up, Hims & Hers Health Incorporated is making a clear statement with this new share repurchase program. They are signaling confidence, aiming to boost shareholder value, and demonstrating a disciplined approach to capital allocation. It will be interesting to watch how they execute this program over the next few years and how it impacts their financial performance and stock price. What are your thoughts on this massive buyback? Do you think it's a smart move by Hims and Hers? Let me know your take in the comments below. If you found this breakdown helpful, please give this video a thumbs up and remember to subscribe for more regular corporate dissections. And don't forget, our Discord channel is waiting for you in the description. Come join the conversation. Thanks for watching, and I'll see you in the next video.